A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of automated trading, we will be continuing our work which we started on Friday. I hope you enjoyed the weekend and feeling up fresh to start the work. This is a awesome oscillator which we will be using with the Fractal. This is a technical description here. I hope by now you are well familiar with all these indicators which we are utilizing for our algorithmic purpose. Before we get started, this is a standard disclaimer. Here I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs for maybe many months and even years to get a clear-cut idea of the efficacy of the said algorithm. And of course, nothing in the webinar is to be constructed as an advice to trade or for particular setup. With that note, we go back to the chart to see what we are trying to achieve. I had explained to you the setup on Friday's session. It is fairly simple. We simply want the buy trade to happen when the maxima and the minima, both these values are rising. Along with that, we will be taking into account these bearish fractal, the minimum value, and we will need the last hourly candle to have closed higher than this recent minimum value. And with that, we also need the awesome oscillators positive values to be rising, so that only during the initial hours of our trend, when the values are rising, the trading should happen, and then as and when the underlying instrument enters into a consolidation phase or it changes course and enters into a reverse trend, then we don't really want to get involved, and that is the reason we are limiting our trading possibilities only when these awesome oscillators positive values are rising. Then we also bring in the ATR value, ATR for the optimizing purpose. So let us add ATR. ATR we are actually utilizing on daily time frame. Okay, we got the ATR and it is 14, and let me see if it is defined. Base period is 4 hours. Use from chart. Okay, so we will be utilizing this value on the daily time frame. With that, now let us see what we have done so far. We did instrument subscription. This time around we are working with the USD JPY instead of Euro USD, which we more often than not we use. This here we got this fractal block, and the shift is 3 with number of bars on each side being 3. So we will be taking into account 7 candles hourly in all, and the minimum value or the maximum value will be the deciding factor for the opening up of trade. Then we got the awesome oscillators with shift 1 shift 2. We did that to be able to compare their values, and we got 4 min max blocks to set in the condition to check whether the momentum is upward or downward, and here we will be comparing the current minima or the maximum value to the minima or maximum value 29 hours back, and we have brought 4 to define this differently. The ask for the high price for the maxima, whereas for minima it is bid and the low price. So simple enough. And then here we did this ATR range, the average true range on the daily time frame. Now we will need to bring in the historical block hourly time frame, and then 10 seconds as well, and then we will also need to do some calculations to set up the precise opening and the closing points. Now we need components, we need info, so we bring in the historical candle hourly first, So here we got this, and we make it shape 1, last as candle. We change this to hourly. Candle period should be 1 hour each. Bit side is fine, and we got the output value as well. For precise entry and exit, we will bring in the 10 seconds candle as well, though we don't really need right away, but we will need while going in for the execution of the trade. So we bring it, and I will explain to you a bit later on what will be the purpose of this. I think we better make it 1 minute, as we are actually working with the on candle start, and which will reiterate every 10 seconds. So it is better if we have the lowest time period defined at 1 minute, so that the reiteration can happen at least 6 times in a minute. Shift will be 1, candle 25, and we get one more, and this will be shift 2, one minute here as well, bid, and this will be shift 2. Now we got this, we need to do now some calculations, and I think the 10% of daily ATR range we will be deducting from the last tick price to get the entry point, and for that we will need to do some calculations here. And we take this and we bring in the line 21, that is the daily ATR range. Then we create a new variable here, and it will be named as pips difference, and you can even make it like ATR difference AD, and it should be 0.1. We make A1 into A2. So here we get ATR range AR, and it will be 10%. Now we will leave some space open for adding the blocks as and when required, and now we start to work with the buy side, and I think we can do some more calculations with ATR, as we will need them for stop loss and target purpose as well. So let us do straight away, and this can be, we will keep the stop loss at 20% of the ATR and the target at 50% of the ATR. So we do that range as well. Let us and here we create a new variable, type is double, and we make it stop loss difference SD, and it will be 0.2. So we may create one more variable, and it will be uh, target difference TD, and it will be 0.5. And now we will need one more calculation expression as well. So we bring it straight away, we try to speed up the process and get the results faster. And here we take line 21, and then we multiply one block by stop loss difference, one by target price difference, and we get here we will need to wait a1 into a2, but then we need the pip conversion as well, and for that, since USD GPY has two decimal points to define the pips, there is a 0.69 107.69, means it is 69 pips above 107 level, so we have to take out this decimal point. For that we need to do the multiplication by 10 raised to the power 2. So we do that and we name it pip conversion difference, and it should be 100. So we take it here and here. Now a1 into a2 into a3, and this type conversion which will be needed, we will do it once we bring in the pending open order or the market open, as the things will suggest. Here also a1 into a2 into a3. So here we have done, oh, now we have to see what should be the exact entry and exit point. I have explained to you the bare bone structure. As you can notice here, this minimum value is less than the prior minimum value. This maxima is less than the prior maximum value. In such instances, only sell trade to happen. But as you can see here, the positive values are still rising, so we will not be looking for a sell trade. Only when the negative value starts to fall, we will be getting involved for a new trade, and because of that we can't really go for a sell trade here. And similarly for a buy trade, let me explain to you where we might have been able to go for a buy trade. So here, as you can notice, these awesome oscillator values are rising till at least 15 of GMT, and that is means here also no trading will happen. We need somewhere here the order will be placed, but considering our requirement, I'm not really sure our order will be executed or not. And then comes again big correction, and again the positive value starts to fall. We don't really want to get involved. Now, we all we need is awesome oscillator to be in the desired zone for any side of trade to happen, either buy or the sell. And to try that, we will now need to do further optimization. We will, as I said, we will leave one blank row just below this one, and now we want to take logical blocks. First is multiple action will enable us. Oh, we forgot to connect. Okay. If the minima or the maxima is rising, then the initial condition for the buy trade is fulfilled and it will move on to check for additional conditions. So first thing first, we take into account the minimum and maximum level, then the hours, and then we will compare it to the other parameters. Now here awesome oscillator will be utilized for determining what is the optimum time for to trade to happen, and then we will be also taking into account the fractal values to just make sure that last tick price when the order is going to be placed is still above the minimum or the maximum as per the requirement. So we first define the awesome oscillator. So for buy trade to happen, this should be in the positive territory and it should be above 0. Of course, any positive number is supposed to be 0, but then it might be even equal to 0, or if there is no output, then it is equal to 0. So we have to state it explicitly. And so again we're doing this, and this one also positive 16, and it should also be above 0. And now we need one more to make sure. So we have done this comparison between these awesome oscillators value 1 and 2 hours back each. We need it to be greater. We also need this to be greater, and then the positive 10, which is so here is shift 1 shift 2 values, and we want the positive 10 to be always greater than the prior numbers, and here the positive 18 is positive 16 is now less than the positive 10, which means momentum is picking up. So we now need to bring in further a blocks. First input greater than the second input. Okay, so we take this. Apart from the min-max condition, we need now to define additional parameters. So here we got this. So here we got this flow going, and now we have defined the awesome oscillator condition, and the next thing we need to do is look for the min-max, and then we will also check that last hourly candle should have closed higher than this bearish fractal, the minimum value, and then we will place the order somewhere 10% below the current market price for maybe a validity of 1 hour or two. So we go now back to Kotak here. I think I said bank's name, which is not required. Pardon me for that. Now we take oh, min max values and we compare it to the min max values 29 hours back. So here we need the value with shift 0 of the maxima. So the maxima should be ask side high price, and here we take it and shift 29 maxima again, and this maxima should be rising and the minima should also be rising. So we take it's taking too much time. I don't know what really happened. Okay, we got this. Now we look at minima, and here oh, bid side low price, bid side low price. So we take this one minimum value, the current value minimum should also be greater than the value 29 hours back, that is more than a day back. and it should be rising for the byte rate to happen. So now we need to connect this. Maximum 17 should be greater than the maximum 18, and the minimum 19 should be greater than the minimum 20. So let us take this below. So here we are adding these blocks, and here we finish this. Now the maximum minima should be rising. That condition has been set. The requirement that the output value should also be in positive zone, and last hour's positive value should be rising compared to the prior hour of the awesome oscillators. So we have defined both of these conditions very well. Now we need to again go back on chart, and here I will explain to you using example of a byte rate. So let us see where we might have been able to buy, somewhere around here, 20. This time also not applicable, this time also not applicable, and here also not much on possibility, maybe here. And after 3 hours have closed, we will be placing a order just little below the closing price. Suppose if there is big move on the upside, still we can be hopeful of catching it up, catching with it, or we will have a order with validity of 1 or 2 hours, and then the order will expire anyways. So we again head back to the chart, and now we will need to compare the closing levels of the 1 minute candle as well, and then we will be, so we take these couple of blocks, and we need to do the calculation as well. I think we have done 10% of the ATR, which we now need to put to use, and we will do for a buy trade. We will be going for a limit order, and for limit order to be placed, we will figure out what should be the optimum entry point, and after that did some research work in the charting. I realized so here we will need to disconnect that, and the last tick price needs to be taken into consideration. So we take last tick and we reduce it from last tick bid and then we deduct whatever is the price from by, actually not from, by the 10% of the ATR range, and that is AR. So here we will now need to do A1 minus A2, and this will be the buy entry point B E. Let me again once check the AR formulation. The AD was defined at 1.0, and yes, that is right. And for the sale trade, we can simply add it instead of doing the subtraction. So straight away we will build that as well. And for that we will need to take calculation expression one more, and again last tick price last tick ask, and we take 10% of the ATR. So we take this ATR 10% of the ATR value. So here is our calculation which we have already done, and okay, so if we do the addition, the 10% of the last tick price, we will be getting the sale price. And I think we will now be wrapping up the session as well, and we will be back tomorrow. So A2, not A3. A3 is empty. So here we have, and it will be SE, sell execution point. Save. So that's it from my side for today's session. We will be back tomorrow in today's session. Then we will do further optimization if needed, or we will continue to build the algorithm the way we are, and let's see how it will evolve and work. So, and now I'm signing off. See you tomorrow. Have an excellent day ahead. Goodbye.